AXA Investment Managers, one of the world's leading investors, continues to expand its presence in the Asia-Pacific region. Headquartered in Sydney, the AXA IM Real Assets Australian team manages over $6.4 billion of real estate across office, retail, hotels, student accommodation and healthcare. Joining us to share his view of Australian property is Head of Real Assets here in Australia, Kumar Kalyanakumar. Thanks for joining us on The Urban Developer.
Thank you, Adam, and thanks for the opportunity.
So let's just start with the broader real estate strategy for AXA IM here in Australia. What drives it and exactly what is that real estate strategy?
Our real estate strategy has three pillars. One is to take capital from Australia to our global platform, to bring clients into Asia Pacific through our Japanese and Australian platforms and provide them with exposure to the relevant markets. And the third one is diversifying our portfolio in Australia. As you know, we've been investing in PBSA, healthcare, logistics over the last couple of years, and we want to continue to do that and also expand into other areas like build to rent.
And so, I mean, this interest in alternative assets has grown a lot here in Australia and globally. I mean, from your perspective, how do you define an alternate asset and what are those target sectors? You just mentioned briefly, but expand on that, please.
If you look at our portfolio globally, we have about 175 billion Australian of real estate assets that we manage. Close to half is in the alternate space. Every person has its own definition of what alternate real estate is, and it depends on the geography as well. For example, in our European core fund, we have 25% in residential. But in Australia, if you say residential, that's well and truly in the alternate space. Investors are looking for greater returns these days. And also us as investment managers also are looking to find that extra return for the investors. And our conviction and our belief is to kind of go into that alternate space because these alternate areas have structural tailwinds that investors can benefit from. We talked about in Australia, there's a lot of chatter around BTR and healthcare. Because we are already there, we know these are good markets, and it's good to see other fund managers wanting to get into it.
So let's talk about healthcare, for example. You had a recent partnership with Centuria and Grosvenor at a time when there was quite a lot of interest in the sector. I mean, what are your thoughts about healthcare now as a sector, particularly post-COVID? Is it heating up? Is it overvalued? Or as you say, are there structural tailwinds behind it that are going to continue for some time?
People are looking for better treatment, better healthcare services. And to do that, governments have stepped forward and, put additional money on the table. The operators are trying to sort of, do their thing. But what has lacked in healthcare, in my view, is that private capital hasn't really gone in like in other parts of the world. If you look at the healthcare real estate stock in this country, they're dated, aging, and also to cater to the increased demand for additional services, newer services by patients and residents. We're needing to build more quality products, and for that you need private money. And we're just at the cusp of sort of seeing healthcare getting securitized, and therefore you're going to see both the REIT sector and the unlisted sector getting into this scene. There's plenty of money to be made if you do it well.
Obviously, purpose-built student accommodation or PBSA is something that you guys have invested in as well. You're a brave investor to be tackling that right now. How are you, I guess, mitigating risk, and what are some of the assumptions and views that you're making about the return of international students into Australia? Firstly,
there's an undersupply of PBSA stock in a normalized market. And second thing is that international student business is the largest service provider and export earner for this country. And why is that? Because, the emerging markets, especially, China, India, and Southeast Asian nations, have a large and, ballooning middle class there. And all of them want to go to countries and get an English degree. Okay, and that is not going to change, and the demand is going to keep increasing and increasing. And we were the third largest international student market prior to the pandemic. And I would say once the borders are open, we're going to see the students coming back. These student housing facilities will be filled. Recently, New South Wales government said that they're happy to bring foreign students and quarantine them in student housing facilities. So the signs are pretty good. So, things are not great today. It'll improve and get better.
Now, we've seen some pretty impressive unemployment data over the last couple of days. We're seeing this likelihood of inflation picking up over the course of the next few years, and then we've seen sort of record yield compression happen at the same time. Can you just talk to me about where you see yields going generally, and have we bottomed out?
Our view is that returns are going to be low for very long time. And we have seen for the last 10 years, yields have been firming and firming. But what has happened in the last 12 months is largely due to weighted capital, low interest rates, and more importantly, investors looking for yield. Yield is king, cash is king, and everybody wants to invest somewhere where they can get predictable yields. And that's why, logistics is very hot these days. They can see, leases are for 10 years, 15 years, and the rents are predictable. There's escalation. Where is that going to go in the short term? I don't think it's going anywhere in the shorter term. The main reason is the pandemic is not over. We haven't got clarity around where the governments are going around the world in terms of their quantitative easing and their fiscal stimulus. So there's a little to play out in there. But in the medium term, I agree. If you look at the swap curve, it's very normal, and it's building in some inflation. And medium term, as an investor, you've got to be careful and be mindful about inflation coming back in, and therefore yields softening.
And just finally, Australia in the global context, obviously AXA being a global investment manager, Australia's stocks surely have risen given the way that the COVID pandemic has been managed, and I guess what life and lifestyle is like here today relative to other parts of the planet. How much have Australia's stocks risen, and I guess how long term do you think that reputation will sort of continue?
Australia is great for foreign investors because of transparency, because of the certainty and the legal framework, and more importantly, it is a very liquid market. For the size of our market, we are very liquid. People can come in, compete and invest, and then exit. Beyond that, my view is that capital these days is global. Capital is agnostic to geography. And therefore, one thing we need to make sure is that whatever Australia offers in terms of real estate to international capital is of relative value. That's what investors are looking for everywhere. Doesn't matter what the sector is, money will come. But I will also sort of flag the fact that we are going to see more and more super funds wanting to put capital outside of Australia. So there is going to be an outflow of some capital from the local scene. However, I think that'll be well and truly offset by international capital coming down this way.
Kumar, thank you very much for your time, and we wish you all the best over the next couple of years.
Thank you. Pleasure to be with you. Cheers.
Thanks for joining us.